Let's dive into the fascinating world of online selling. How selling online has revolutionized everything we know about commerce and trade. Gone are the days of garage sales and newspaper ads. The traditional ways of selling items have been completely transformed. The internet turned local sales into global opportunities, allowing anyone to reach customers from all corners of the world. Your hobby could become a business reaching worldwide. What once was a pastime can now be a profitable venture. Platforms like Etsy and eBay became bustling marketplaces, connecting buyers and sellers in ways never imagined before. This shift empowered millions to earn from their passions, turning side hustles into full-time careers. But with growth came attention from the IRS. The tax man is always watching. As the online economy boomed, tax regulations followed. Sellers had to adapt to new rules and requirements. The IRS wants to ensure everyone pays their fair share. Compliance became a crucial part of the online selling journey. So, while online selling is a boon, it also means understanding tax forms and staying on top of financial responsibilities. The digital marketplace is vast, and so are the responsibilities that come with it. Sellers must navigate a complex landscape. It's not just about selling, it's about playing by the rules. Understanding policies and regulations is key to success. The IRS is watching, and so should you. Staying informed and compliant is essential. Embrace the change, but stay informed. Keep up with the latest tax laws and marketplace policies. Let's explore what this means for you and how you can thrive in this new era of online selling. Let's demystify the Form 1099-K. If you've ever sold something online or received payments through digital platforms, you might have heard about this form and wondered what it actually means for you. The 1099-K can seem intimidating at first, but it's really just a way for the IRS to keep track of certain types of income. Think of it as a report card for your online sales. It's a summary that shows how much money you've received through third-party payment networks or online marketplaces over the course of the year. It's not a bill, it's an informational document. The 1099-K doesn't mean you owe extra taxes just because you received it. Instead, it's a record of your gross payments sent to both you and the IRS. The form shows how much you received through platforms like PayPal, Venmo, eBay, Etsy, or even ride-sharing apps. If you've been paid for goods or services, those payments are tracked and reported. These companies are required by law to report your total transactions to the IRS if you meet certain thresholds, like a specific dollar amount or number of transactions in a year. It's all about transparency and making sure everyone is accurately reporting their income. The IRS uses this information to cross-check what you report on your tax return. The 1099-K lists your gross sales, which means the total amount you received before any deductions. It doesn't show your actual profit. It doesn't account for expenses like shipping, cost of goods, platform fees, or other business costs. You'll need to keep track of those separately, so don't panic if you receive one. It's just a starting point for figuring out your taxable income. It's normal for online sellers and gig workers to get this form. Your taxable income will usually be much lower after you subtract your legitimate business expenses. That's why good record keeping is so important. The form helps ensure everyone is on the same page. Both you and the IRS know what was reported, reducing confusion or mistakes. It's a tool for clarity, not a cause for alarm. With a little organization, it can actually make tax time easier. Understanding how the 1099-K works is key to managing your online income and staying compliant with tax laws. It's all about being prepared. Keep track of your expenses, save your receipts, and update your records regularly so you can report your income accurately and confidently. Remember, the 1099-K is just one piece of the puzzle when it comes to your taxes. With the right knowledge and preparation, you can handle it with ease. Let's travel back in time for a moment, to a period when online selling was a bit simpler, and the rules for reporting your income were much more forgiving. To truly understand the recent changes to the 1099-K form, we need to see how things used to work for online sellers and small business owners. In the past, the threshold for receiving a 1099-K was set quite high, making it relevant only for a select group of sellers who were moving a lot of product or handling a large number of transactions. Specifically, you needed to process more than 200 transactions and have over $20,000 in gross sales through a single payment platform before you'd see a 1099-K in your mailbox. This meant that many casual sellers, hobbyists, and even some small businesses flew under the IRS radar with their online income going largely unreported. But as the digital economy grew, the IRS realized it was missing out on a significant amount of taxable income, so the rules have been updated to capture more revenue from online transactions. Now, the new threshold is much lower, just $5,000 in sales with no minimum number of transactions required. Even if you make a handful of big-ticket sales, you could be affected. This shift means that a much broader group of people, including part-time sellers and those just testing the waters of e-commerce, will start receiving 1,099K forms from payment platforms. The IRS is rolling out these changes gradually, with a phased approach that aims to eventually lower the threshold all the way down to $600 in the coming years. For the 2025 tax year, $5,000 is the magic number you need to keep in mind if you're selling online. If you sell more than $5,000 on any single platform, you'll receive a 1,099K, regardless of how many transactions it took to get there. This change will impact a huge number of sellers, far more than before, so it's important to be prepared and keep accurate records of your sales and expenses. The landscape for online selling is shifting dramatically, and understanding these new requirements is essential for anyone hoping to stay compliant and avoid surprises at tax time. The IRS is tightening its grip on digital transactions, making it more important than ever to stay informed and proactive about your tax obligations. Understanding these rules is crucial for compliance and can help you avoid costly mistakes or penalties down the road. So, let's break down what these changes mean for you and how you can navigate this new era of online selling with confidence. Will you receive a 1,099K under the new rules? If you sell over $5,000 in goods or services on one platform, yes. Personal payments, like splitting rent, don't count. It's about business transactions, not personal ones. The threshold applies per platform, not combined sales. Sell $6,000 on eBay, and you'll get a 1,099K from them. This rule affects a wide range of sellers and freelancers. Gig workers and online sellers need to be aware. Personal sales at a loss aren't taxable, but still reported. The platform doesn't know your profit or loss. It's up to you to prove non-taxable sales. Keep records to show the IRS your true income. Understanding these distinctions is key. Stay informed to avoid surprises. Let's keep exploring. Let's look at real people affected by the $5,000 rule. Meet Sarah, a teacher who sells knitted items on Etsy. Her sales might hit $5,500, triggering a 1,099K. David, a student, sells vintage games on eBay. He'll get a 1,099K for his $8,000 sales. Maria, a freelancer, uses Upwork and PayPal. She must track income from both to report accurately. Tom, decluttering his home, sells $5,200 worth of items. He'll get a 1,099K, despite selling at a loss. These stories show the rule's broad impact. It's not just businesses. Casual sellers are affected too. Understanding your sales and expenses is crucial. Keep records to prove non-taxable income. The new rule changes the game for many. Let's see how to stay organized. Why is the $5,000 threshold a big deal? It pulls casual sellers into formal tax reporting. Many will receive IRS forms for the first time. This can cause confusion and mistakes. People might panic over the gross amount reported. They need to know they can deduct expenses. Personal sales versus business sales add complexity. Platforms report total sales, not profit. The burden of proof is on the seller. Mixing personal and business transactions complicates things. Accurate record-keeping is essential. The change demands more responsibility from sellers. It's about adapting to new rules. Stay informed to navigate these changes. Let's explore how to manage this. Feeling overwhelmed? Don't worry, we've got tips. Start by keeping good records of sales and expenses. Use a spreadsheet or notebook to track everything. Separate business and personal finances. Open a separate bank account for your side hustle. This simplifies tracking and reduces confusion. Keep receipts for all business-related expenses. Snap photos of receipts and store them digitally. Regularly review your sales and expenses. Set aside money for taxes if you're profitable. Stay organized to avoid last-minute stress. These steps make tax time manageable. Preparation is your best defense. Embrace these habits for peace of mind. Let's wrap up with final thoughts. Let's simplify your action plan. Start tracking sales and expenses immediately. Create a system that works for you. Ensure payment apps are used correctly. Separate personal and business transactions. Consider a dedicated bank account for sales. Document sales of personal items at a loss. Keep proof to show the IRS if needed. Don't hesitate to seek professional help. A tax advisor can provide tailored advice. They help you understand deductions and rules. Investing in advice saves stress and mistakes. You're not alone in this process. Take these steps to stay ahead. Let's conclude with staying informed. The online selling world is evolving. The new 1099K rules are part of this change. It's about being mindful of your online income. More sellers will receive IRS forms now. The key is preparation, not panic. Knowledge empowers you to handle changes. Expect a 1099K if you exceed $5,000 in sales. Remember, it shows gross sales, not profit. Good record keeping is your secret weapon. Stay informed about future rule changes. Follow updates from the IRS and platforms. The online marketplace is a powerful tool. Embrace the responsibility it brings. Be proud of your achievements, big or small. You've got this, and that's great news.